Hello and welcome students. In the last video lecture, I had explained you the adjustments related to final accounts of partnership firm. Now in this video lecture, we are going to start the practical sums, which are very important as discussed for the board examination. Today I am going to teach you question number 9 of your textbook, that is on page number 79. Let us read the question. Parthiv and Priya are partners of a partnership firm. Here there are two partners, Parthiv and Priya. From the trial balance dated 31st March 2017 and adjustments prepare final accounts of a partnership firm. From the trial balance that has been given to you and then afterwards the adjustments, we have to prepare the final accounts of partnership. The trial balance, that is drawings, net cost of purchase. It has been given star and given the note at the end of the trial balance, that is net cost of purchase means adjusted purchase. Net cost of purchase means opening stock plus purchase minus closing stock. Whatever the balance remains, that is called the net cost of purchase. It means directly here the adjusted purchase is given to you. So directly that value you will be putting it on the debit side of trading account. Okay. Then after stock of goods, that is closing stock. Whenever already discussed that whatever the entries that are given in the trial balance, that will be having only one effect, and whatever the adjustments are given, that will be having two effect, that is one debit and the other one credit. Okay. Next, that is receivables, wages, salary, trading expense, building, furniture fittings, wages and salary. Now wages and salary, if the word here it is given salary wages, then it would be recorded on debit side of P&L account. But if it is given wages salary, then it will be recorded on debit side of trading account. Okay. If the word wages is given first, then you have to write on the debit side of trading account. And if salary wages is given to you, then you have to write on the debit side of P&L account. Okay. Then afterwards, building, furniture, fittings, office equipments, all are assets. Packing material stock, that is the closing stock of packing material, so it will be having only one effect, that is asset side of balance sheet. Cash balance, capital of both the partners, sales, payables, goods distributed as sample. Over here goods are distributed sample, it will be having only one effect. Okay. And then afterwards, bank overdraft, it is our liability. Now adjustments, provide 8% interest on capital and 12% on drawings. Parthiv had withdrawn rupees 400 at the end of each month. Now any of the partner, if he or she is withdrawing the amount of drawings at the end of every month, then already as discussed in chapter number 1, if you want you can refer, if the drawings or if the amount is withdrawn by any of the partner at the end of every month, then you have to multiply by 66 by 12. Even the calculation is shown in chapter number 1, so you can refer chapter number 1, that is how multiply by 66 by 12 it would be there. If it is at the beginning of every month, then it would be 72 by 12. Okay. Now, and Priya had withdrawn on 1st October 2016. 1st October 2016 means for 6 months, because from the date of withdrawal till the accounting year ends. What is the date of withdrawing? That is 1st October. Okay. So from 1st October, so 10, 11, 12, 1, 2 and 3. For 6 months drawings you have to count for Priya. Interest on drawings for only 6 months you will count for Priya. Okay. Then afterwards, credit sales of 10,000 is not recorded. Total of sales book of March is overcast by 2,000. Now, unrecorded credit sales. Already we discussed the adjustment effect of this kind of entry. Unrecorded credit sales. So now that is to be recorded. So that much amount you will plus in sales and the same amount you will plus in the debtors. And total of sales book of March is overcast by rupees 2000. Now March sales has been overcasted by rupees 2000. It means sales which was less by 2000, but it has been shown higher by rupees 2000. So you can see I have given only one effect over here, that is I have subtracted from sales on the credit side of trading account minus overcast, that is rupees 2000. But the simultaneous effect I have not given on the asset side of balance sheet, subtracting from the debtors. The reason for it, it is an adjustment, no doubt, then it should have the two effect. But over here you can see the sixth adjustment, that is the last adjustment of this sum, that is outstanding wages of 2000 is recorded to wages account, but outstanding wages account is not recorded in trial balance. So this adjustment will also have two effect. that is one effect that would be on the debit side of trading account, and the other effect that would be on the liability side of balance sheet. But you have studied in standard 11 the types of errors, rectification of errors. In that chapter we have discussed one kind of error, that is compensatory errors. Compensatory errors. Okay, now this type of errors are such that one side expenses occurred and the same amount of expense or loss or liability has been occurred, which is having the same kind of effect. So instead of giving 4 different effects, we are giving only 2 effects over here. Now what would be the 2 effects over here? See, overcast by rupees 2000. So I have subtracted 2000 from over here credit side. So if I have subtracted 2000 from the credit side, ultimately we have given debit effect. And the second effect, that is outstanding wages, that I have given the credit effect over here on the liability side of balance sheet. So it means credit effect, that is rupees 2000. So instead of giving 2 effects of wages and 2 effects of sales overcast, I have done compensation in the errors and rectified it by giving only 2 effect. Okay, ultimately 1 effect debit and 1 effect credit. So instead of giving 2 effect, this is an example of compensatory error. So instead of giving 2 effect, I have given instead of giving 4 effect, I have given 2 effect over here. If you want, you can give all the 4 effects also. Ultimately the total would come different by rupees 2000. The total would vary everywhere, but it will get tallied. Ultimately the sum would get tallied. There would be minor difference in the profit also, but ultimately your answer would come correct and your balance sheet would get tallied. But over here, instead of giving the 4 effect, I have followed the rule of that compensatory error and given only 2 effect of this 2 adjustments. Okay. Now, fourth adjustment, that is furniture of third one, right of additional bed debts of 2000, you provide 5% bed debt reserve on debtors. Already students, we have discussed that whenever bed debts, bed debt reserve, discount reserve or any kind of unrecorded credit sales is given in the question, then always from debtors the first priority that would be of unrecorded credit sales, that would be added, and then afterwards on that amount bed debts we have to count, and after subtracting bed debts, whatever the balance remains, on that we have to count the bed debt reserve. Okay, so that sequence is to be followed over here. Then afterwards, the court has finalized claim of 4000 for not meeting agreement to provide goods to a customer. It means there was an agreement with one of the customer to provide the goods of rupees 4000, but we had not provided the goods timely to the customer. So the customer has filed a case in the court, and the court has given the judgment to provide a claim of rupees 4000 for not fulfilling the agreement with the customer. Okay, so that is an outstanding claim that would be having 2 effect. Okay, that is loss due to claim. You can see on the debit side of P&L account that I have written to loss due to claim, that is 4000, and the second one, that is a liability arised for the firm. So it will be shown on the liability side of balance sheet. Okay, now orally understanding the sum, let us continue with the practical solution of this sum. You can see on the board that I have prepared trading account, P&L account, P&L appropriation account, partners capital account and balance sheet. Okay, so in case of partnership firm, we have to prepare 5 different things, but in case of sole proprietorship, we used to prepare only 3 things, that is trading account, P&L account and balance sheet. Over here it is partners related, partnership firm is there. That's why any kind of expense or income related to the partners, any kind of dealing of the partners directly with the firm, so for that we are preparing P&L appropriation account and separately the partners capital account in order to find their closing capital. Okay, so clear with that. Now each and every entry will be reading from the trial balance and do the posting in the concerned account. Okay, first one, that is drawings given to you, that is of Parthiv and Priya, that is 4800 and 3200. Okay, now drawings that is given to you, we had already discussed that in partners capital account always the opening balance will be shown on the credit side and drawings will be shown on the debit side. Okay, so to drawings 4800 for Parthiv and for Priya that is 3200. Then afterwards net cost of purchase, that is 1,06,000. Already I have explained that would be having only one effect. to net cost of purchase on the debit side of trading account, that is 1,06,000. Then after stock of goods, that is closing stock, and that is given to you in trial balance. If this closing stock would have been given to you in the adjustment, then it would be having two effect. Over here it is given in trial balance, so it will be having only one effect. What is the value given to you? That is 28,000. So that will be shown only one effect on the asset side of balance sheet, that is closing stock 28,000. Next one, that is receivables 48,000, that you will be showing as debtors. Over here receivables and debtors, bills receivable and debtors both are not given separately. So whatever the receivables that we are considering as debtors, in certain sums receivables and debtors both the values are given to you separately, but over here only receivables are given to you. So whatever the receivables that we are considering as debtors, okay, so debtors, that is 48,000. Then afterwards, wages and salary, already I discussed that it would be shown on the debit side of trading account. So you can see on the debit side of trading account that I have written to wages and salary, that is rupees 10,000. Then afterwards, trading expense, that would be shown on the debit side of P&L account. You can see on the debit side of P&L account to trading expense, that is rupees 16,000. Then afterwards, building, furniture, fittings, office equipments, all on the asset side of balance sheet. You can see furniture, I have written in the inner column because adjustment is there. Students, on whatever the entries in the trial balance, there is an adjustment. If you cannot remember, then while referring the question, you put a tick mark on that particular entry in the trial balance. So you will remember that this particular entry you don't have to show directly in the outer column, you have to mention it in the inner column, and after providing the adjustment effect, you have to show it in the outer column. Okay, so furniture, there is an adjustment, so inner column. Office equipment, there is no any adjustment, so as it is 4,000 in outer column, and on building also there is no any adjustment, so directly in the outer column. Okay, then afterwards, packing material stock, it is a closing stock, so only one effect because it is given in the trial balance. So you can see on the asset side of balance sheet, last entry that I have written, closing stock of packing material. I have written short forms over here because of lack of space. So closing stock of packing material, that is rupees 4,000, as we are showing the closing stock of goods, same with closing stock of packing material on the asset side of balance sheet. Then afterwards, last entry on the debit balances, that is cash balance, that is 2,000. So as it is cash balance, that is rupees 2,000 on the asset side of balance sheet. After completing debit balance, let us move on with the credit balances. Credit balances, first entry, that is capital of both the partners, 24,000 and 16,000. Okay, so as drawings will be written on the debit side of partners capital account, opening capital will be written on the credit side of partners capital account. So buy balance brought down 24,000 and 16,000. Then afterwards, sales, that is 2 lakh. Buy sales, that is written in the inner column because unrecorded credit sales, there is an adjustment on it. So inner column will write 2 lakh buy sales. Okay. Then afterwards, payables, that is on the liability side, will be writing over here, that is creditors. You can write payables over here, word also over here. I have written creditors. Instead of creditors, you can write payables also. That is rupees 30,000 on the liability side of balance sheet. Then afterwards, goods distributed as sample, that is rupees 2,000 given to you. Now goods distributed as samples, that is given on the credit balance is being given to you, right, and it is in the trial balance. Only one effect would be there, that is goods distributed as samples, that is rupees 2,000 on the credit side of trading account. You can even subtract from the debit side of trading account from the purchase, but over here the net cost of purchase is given to you, so we have directly given the credit effect of goods distributed as sample on the credit side of trading account. Even if it is given in adjustment, suppose this transaction is given to you in the adjustment, then the second effect, that would be advertisement expense, that you will be showing on the debit side of P&L account as one kind of expense, and one entry you will be showing on the trading account. Okay, but it is given in trial balance, so only one effect, that is on the credit side of trading account. Okay, now complete last entry, that is bank overdraft, that will be on the liability side of balance sheet. You can see I have written liability side of balance sheet, bank overdraft, that is rupees 14,000. Now we have completed all the entries of trial balance. Now moving on to the adjustments. The first adjustment, that is provide 8% interest on capital and 12% on drawings. First of all, we'll calculate 8% interest on capital. Now opening capital has already been given to you. Now in between, any of the additional capital has not brought by any of the partner. If it is given in the question that additional capital has been brought in between, then date would be given. So on additional capital, we have to count the interest on from the date that has been provided. For that many months, we have to count the interest. Over here, no additional capital is there. So directly on the opening capital, we will count 8% interest. On 24,000, 8% interest, it would come 1,920. You can count it. And on 16,000, 8% interest, that would come to 1,280. Okay. So two effect that would be having, because it is an adjustment. So one effect, that is credit side of partners capital account by interest on capital 1,920 and 1,280. And the second effect, that would be P&L appropriation account, because that would be one kind of expense or loss for the firm, because that much amount of interest on capital the firm has to pay to the concerned partner. Okay, so here you can see I have written two interest on capital, Parthiv and Priya, 1,920 and 1,280. Total that would come to 3,200. Students, make it clear, in all the other accounts we have to make only same format, that is particulars amount rupees, particulars amount rupees. But in case of partners capital account, we have to make two different columns for two different partners. Even the date column is also important over here, but I have not mentioned the column of dates. If you require, then you can also add the column of date on debit side and credit side. Okay. Now interest on capital, both the effects has been given. Now moving on to 12% interest on drawings. Parthiv had withdrawn rupees 400 at the end of each month. You can see the calculation that I have shown over here. Interest on drawings at the last, that is for Parthiv 400, that is at the end of every month. 400 multiplied by rate of interest, that is given to you 12%. So multiply by 12, divide by 100, multiply by, already I have discussed that if it is at the end of every month, then multiply by 66 by 12. So multiply by 66 by 12, 12 will be cancelled, 100 cancelled. So 4 into 66, it would come to 264. That is interest on drawings for Parthiv. Okay, same way we have to calculate for Priya. Now in case of Priya, it is given to had withdrawn on 1st October 2016. Now what is the drawings of Priya? That is 3,200. That is for 6 months. Already we had counted, that is 10, 11, 12, 1, 2 and 3. That is from October to March. Okay, so for Priya, 3,200 multiply by same rate of interest, that is 12%. So 12 upon 100 multiply by 6 by 12, because for 6 months, so 6 by 12. So cancelling 12, 100 cancelled, so 32 into 6, it would come to 192. So the interest on drawings for Parthiv, that would come to 264, and for Priya, that would come to 192. Now how to do the entry? That would be same, opposite of the interest on capital. Drawings, interest on drawings, both would be coming on the same side. So you can see partners capital account debit side, that I have written 2, interest on drawings 264 and 192. And interest on drawings is one kind of profit or gain for the firm. So on P&L appropriation account, credit side, that I have written by interest on drawings Parthiv and Priya, 264 and 192, total that came to 456. Okay, so in P&L appropriation account, we have to totally look from the point of view of the firm, and partners capital account, we have to look from the point of view of the concerned partner. Okay, now first adjustment, then after second one, credit sales of 10,000 is not recorded in total of sales book of March, is overcast by 2,000. Unrecorded credit sales, that is given to you 10,000. Okay, so already we discussed in the adjustment effect also, that is one effect that would be adding in the sales, okay, on the credit side of trading account. So plus unrecorded sales, you can see over here I have added rupees 10,000. And the second effect, if we are adding in sales, then same amount we have to add in the debtors also. If we are adding in purchase, then same amount we have to add in creditors also. Sales and debtors are having direct relation. In the same way, purchase and creditors are having direct relation. So over here I have added in sales, that is 10,000. So same amount I am adding in debtors also on the asset side of balance sheet. Plus unrecorded sales, that is rupees 10,000. You can see I have added on the credit side. So one effect, that is credit effect. and on the asset side, so second effect, that is debit effect. So always adjustment will be having two effect, one debit and the other one credit. Okay, so plus unrecorded sales, that is 10,000, total that came to 58,000. Okay, then afterwards, another adjustment is given in the same transaction, that is total of sales book of March is overcast by rupees 2,000. Already I have explained that this is a kind of compensatory error with the sixth adjustment. Okay, so I have given only two effect instead of four effect of these two adjustments. So one effect that I have subtracted because it was overcast, it was shown more than the actual balance of sales. Okay, so we have to subtract that much amount from sales. So minus overcast, that is 2,000 over here, and the subsequent second effect I have not given of it. Instead of that, I have given the second effect of wages, that is on the liability side of balance sheet, that is outstanding wages, that is rupees 2,000, that is as for the sixth adjustment. Okay, so we have completed second one also and the sixth adjustment. Now the third adjustment, that is write off additional bad debts of 2,000 and provide 5% BTR on debtors. Now we had already discussed that after unrecorded sales, whatever the balance comes, on that only we have to count the bad debts and bad debt reserve. Okay, so your balance gain, that is 58,000. From 58,000 minus bad debts value that is given to you 2,000. So subtracting 2,000, it would come to 56,000. 56,000, you will count 5%. You will not count 5% on 48,000. You will count on the balance after subtracting bad debts. You will count 5% BTR on the value that remains after subtracting bad debts. So over here, after subtracting bad debts remains, that is 56,000. On 56,000, 5%, that would come to 2,800. Subtracting it in the outer column, it would come to 53,200. Now this bad debts and bad debt reserve, that is in the adjustment. Already we have discussed the format, what we have to represent on the debit side of P&L account. Over here, the trial balance, bad debts and bad debt reserve is not given to you in the trial balance. Only adjustment, bad debts and bad debt reserve is given to you. So both the entries, you will be showing it on the debit side of P&L account. You can see on the P&L account debit side that I have written two bad debts, in the bracket I have written A. A means adjustment. Adjustment, that is 2,000, and bad debt reserve of adjustment, that is 2,800. So 2,000 plus 2,800, outer column 4,800. Okay, so both the effect that came over here we have subtracted, so ultimately we have given credit effect over here, and over here we have added on the debit side, so we have given debit effect. So every adjustment should be having two effects, so you tally it every time, so no any mistake would be there. If in the if of the adjustment you have given two credit effect or two debit effect, then ultimately your answer would not get tallied. So while giving the effect, you verify whether one effect is debit and the other one is credit. Okay, so no any mistake would be remaining while doing the total of the balance sheet. Now completion of the third adjustment, fourth one. Furniture of 4,000 became obsolete, which is not recorded in the books. Now it has been destroyed, or it has become very old, so loss has occurred to the firm due to that decrease in the value of furniture, that is rupees 4,000, which is not recorded in the books. So now that is to be recorded in the books. So here you can see I have written loss due to value of furniture has been reduced. So minus loss, so value of furniture minus 4,000, so remaining value of furniture that will be showing in the asset side of balance sheet, that is 6,000, and loss has been occurred due to furniture, so that will be having one effect, second effect on the debit side of P&L account. So here you can see on the debit side of P&L account that I have written to loss due to furniture, that is rupees 4,000. So two effect, that is subtracting on the asset side, so credit effect, and one effect on the debit side of P&L account. Okay. Then afterwards, fifth adjustment, court has finalized claim of 4,000 for not meeting agreement to provide goods to a customer. That is one kind of claim that has been declared by the government on us. So that is one kind of liability for the firm to pay it. Okay. So there will be two effect of this adjustment, outstanding claim. Because of that, losses occurred to the firm. So one effect that you can see on the debit side of P&L account, that is to loss due to claim, that is rupees 4,000, and it is one kind of liability that is on the firm to pay to the court, to pay to the concerned customer. So outstanding claim, that is on the liability side, that is rupees 4,000. So one effect, debit side of P&L account, debit effect, and liability side of balance sheet, that is the credit effect. Okay. Now last adjustment, already compensatory error is according to compensatory error we have given the two effects of sales overcast and outstanding wages instead of giving four effect of it. So all the entries that we have completed, even there is no any hidden adjustment in the trial balance also. Sometimes loan would be given and bracket the date would be given. So if the bracket date would be given, so accordingly we have to count the interest on loan. But over here such kind of transaction is not there. So any of the hidden adjustment is not given to you. After verifying all the entries from trial balance and from the adjustment, we have to do the total of one by one accounts. First of all, the total of trading account, that would be coming to 2,10,000 on both the sides. Difference that would be coming to 94,000. That would be your gross profit. Always the difference of trading account, that will be called as gross profit. If the difference comes on debit side, total of credit side is more and difference comes on debit side, then it is 94,000, that is profit. Okay, so that profit you will be transferring on the debit credit side of P&L account. First entry, that is by trading account, you can write by gross profit also over here, that is rupees 94,000. Total over here same 94,000. Difference on the debit side, again over here total of credit side is more, so difference comes on debit side, that you will be transferring to P&L appropriation account. Okay, so that is net profit. To net profit, that is 65,200. That net profit, I have written everywhere question mark. It means you can understand that this value I have found out. Okay, so that net profit will be transferring to credit side of P&L appropriation account. So first entry on the credit side, that is by P&L account, you can write by net profit also, that is 65,200. Now the total of credit side of P&L appropriation account, that is coming to 65,656. Both the sides same total. Difference, that is coming to 62,456. Now this is divisible profit. Already we discussed whatever the difference comes of P&L appropriation account, that is called divisible profit or loss. Over here the difference comes on debit side, so it is divisible profit. That is to be distributed amongst both the partners in equal ratio. If any of the profit sharing ratio is not given to you, then it is to be understood in equal ratio. So as per 1:1 ratio, it would be coming for Parthiv and Priya, that is 31,228 for each of the partner. Okay, so that divisible profit, that will be transferring to partners capital account. You can see on the credit side of partners capital account, I have written by P&L appropriation account 31,228 and 31,228. Okay, now closing the partners capital account. The total of credit side, that is more 57,148 and 48,508. That same total I am putting on the debit side. Difference that would be coming to balance carried down, because this is the closing balance of capital of the partners, that came to 52,084 and 45,116. That closing capital will show it in the new balance sheet after at the end of the accounting year. That is of Parthiv and Priya 52,084 and 45,116. Now we will not show the opening balance, whatever is given to you in the trial balance. Now we will show, after giving the effect of all the adjustments, whatever come the closing balance, that you will be showing in the balance sheet. Okay, so here the new the closing balance of capital, that is 52,084 and 45,116. Total that came to 97,200. Now all the effects already we had understood from the trial balance and the adjustment. So you have to do the total of both the sides. Here you can see the total of both the sides, that is coming equal 1,47,200, and on the asset side also 1,47,200. So students, that's the end of the sum. This entire sum, if it is complete and correct, then you will score 11 marks in the board examination. So that's all for today, students. In the next video lecture, we'll be continuing this type of sums. Till then, goodbye. Keep practicing. Stay blessed.